Hey, what's up? Today I'm gonna teach you guys liquidity and stop hunts explained. Has this ever happened to you? You just entered a trade, price just broke a high, tapped into your stop loss and reversed. That wasn't really an accident. That was a liquidity sweep most likely. And today I'm gonna show you how you can use that in your favorite and why it happens. So first. What is liquidity? Well, liquidity is where money sits in the market. It's where pending orders and stop losses are sitting. So basically, liquidity is it's where the money sits in market. It's where you have pending stop orders. You have liquidity basically under every low and over every high. So over here, there's liquidity too. Um, yeah. Well, what is a stop hunt? A stop hunt is a fast move above a high or below a low that grabs liquidity, also known as a liquidity sweep, then the market reversing, leaving retail traders wrecked. Institutions use this to get optimal entries. Institution in institutions also use the liquidity sweep right here, or they manipulate the liquidity sweep to also trap traders, because in these markets, for someone to make money, someone else has to lose money. So what they do is many retail traders will see this level right here as support. So what the market makers or the big banks will do is they will drive the market under this level, so all of those stop losses get taken out, and then they will reverse the market and it will rally in the opposite direction. Almost every single big move starts with a liquidity sweep. Why it happens? Well, large players like bank and institutions need liquidity to fill orders. Sweeps tricks retail trader into entering the wrong way, and smart money collects order before moving the price. Also, yeah, another thing that also happens, a way they trap retail traders, is that because this is support level, many traders see this as a breakout, right? They see price trades start trading below the support level, and they all go short right there. Like, yeah, it's a breakout. We're trading a breakout, going short, short. So they're also it's also like a fake out, you can say, almost. So yeah, it also traps retail traders in that way, and then it reverses. We also have a quote there: the sweep is the trap, the entry is after the trap is triggered. That basically just means that, like, the sweep, that's the big trap, that's the big move, or what causes the big move. But you never do like an entry down here of a liquidity sweep. You always want to find like a retrace down to it. What to look for: equal high or lows, expect a sweep. So if you see equal highs and lows somewhere, you can 100% accept price to sweep that. As you can see here, we have some equal highs here, or relative equal highs. You can expect that to be swept because retail traders will see that as a good resistance, and institutions and bank will go and sweep that level out and trap retail traders. You can also look for keys, highs and lows. That's also where liquidity lies in the markets, like under here or here, or here liquidity, here, under here. Yeah. So let's hop in the real chart and see some real chart examples of this liquidity sweep. We can start off. I can see one already right there. We have these like relative equal lows right there. We can see we have a low here. We also have a low here. We can see that price goes down, sweep these lows, manipulate under, sweep these lows, and rally ups. It happens all the time. The liquidity sweep or liquidity gets swept out, that's really what causes these big moves. You can see here we have a high here, key high, liquidity lies over here, price goes up, sweeps out that key high and rallies down. And you can see this happen like all the time. I can almost promise you like this big move happened because of a liquidity sweep. You can see it right there. You have a key low, and there's a bunch of like sell stops and stop losses resting under here and under here, and then price goes down, sweeps those and rallies up. And if you master liquidity, you will master trading, because, or at least my trading strategy, the foundation of my trading strategy is liquidity. It's spotting where liquidity lies, where it's manipulating, where price wants to go, what liquidity grabs, like what liquidity want to grab, and yeah, just in general, like liquidity, that's the foundation of it. I usually look for like a liquidity sweep and then I retrace into a fair value gap or something. And yeah, so just go around, practice marking liquidity sweeps that you can see. Like, oh, this hasn't been swept yet, it looks like, but this again, this is under here, there's so much liquidity under here, so yeah, price might want to sometime go down there and sweep that out. Over here we have like liquidity here, price sweeps this, you have liquidity here, price sweeps, rallies down. Just practice going around, marking. Over this top you have some liquidity, price sweeps it. Just go around, practice like these liquidity sweeps and master spotting where liquidity lies in the market. And then you will get so freaking good at trading. Right, see you in the next video.